in the chat introduce yourself in the chat with your name, organization, and where you're joining from. It's always great for us to see who's here and where you're joining from. And when you do so, there's that little blue box just above where you type in the message. Please select all panelists and attendees just to make sure that everyone can see who is here as well. If you have questions, as for previous sessions, please make sure to send them in the Q&A to make life easier for our moderator to keep all the questions together. That's a separate box to the chat. A reminder that this session is being interpreted into French and Spanish, and you can access that in the bar at the bottom if you'd like to. And all sessions are being recorded, live streamed on social media, and those will be available after the session. I'd now like to welcome the moderator to come onto screen and start the session.
Good morning, everybody. Good afternoon, friends who are joining us from far away. My name is Valerie Hickey, and I'm a regional manager for environment at the World Bank. And it's my absolute pleasure to join you here this morning at the first ever Caribbean Conservation Finance Congress. And it's an absolute delight to be here with you. I wish we were all together. You know, while some of us are lucky enough to live in countries where the COVID vaccine is freely available, I know that's not true for all of us. And this has been an incredibly tough year plus for all of us. And my heart goes out to everybody who's still struggling with COVID, who have family members who are still struggling, who are living in economies that are still struggling, particularly across the Caribbean. And of course, my heart goes out to all of our friends in Haiti with everything that's going on there today. I know we all feel for you and we are there for you. This morning, we're going to have a wonderful session that really talks about money. And that's what conservation finance is ultimately all about. And it's especially important for countries in the Caribbean where we know that aggregate economic indicators, like many of the countries being considered upper middle income countries, hide an awful lot of individual hardship. And moreover, hide the fact that many countries simply don't have available finance to protect the incredibly important natural capital that underpins the economic activities of these countries. And this is never more important than right now for nature to be protected, because we know that for the economies of the Caribbean to rebound, many of the activities that underpin economic success across the Caribbean are based on nature. People come to the Caribbean, visitors come. We all wish we were there right now because of the incredible beaches. Those beaches are part of the natural capital and they're sustained by the natural capital across the Caribbean. Same is true of agriculture, of fisheries, of all of those activities that are so important to the economic rebound of the Caribbean. Nature is at the heart of that. And financing for nature is critical so that we can protect that natural capital. We can help diversify and grow the economic activities around that natural capital, and that we can make sure that the benefits of those activities and the benefits of natural capital are shared with all local communities and local people across the Caribbean, not just with visitors. And so again, a huge thank you, especially this morning, to our four great panelists who are going to join us. We're very lucky to be joined by Joan Larrea, who is the CEO of Convergence, by Nicolas Pascal, who's the Executive Director for Blue Finance. We're joined by Angelique Pouponneau, the Executive Director from SeyCCAT in the Seychelles, and Viviana Luján, a Conservation Finance Specialist. And what we're going to talk about today is how do we think about two things that are very important: blended finance and impact investing. We all know that there's three places we can get our money from for conservation. The first and the most important, regardless of what any of us think, the one that keeps us going, is domestic resource mobilization. Whether that's public budget, whether it's local communities providing funding, it's about money being available through public budgets, money being available by local people to protect local nature. Domestic resource mobilization is important. Development finance. This is a huge source of finance internationally. Globally, the world gets about $150 billion of overseas development assistance a year. That sounds like a lot of money. It's not when you think about all of the countries that need it. It's not when you think that less than 7% of that total overseas development assistance budget comes to the whole of Latin America and the Caribbean, less than 7%. And that's for all of LAC. So think about how little funds actually flow into the Caribbean ultimately. But it still is important. And we know that many of the organizations around the table today, around the virtual table, depend on the type of donor finance that's available from overseas development assistance, whether it's through institutions such as my own, the World Bank, through the Global Environment Facility, and I know Carlos Manuel gave a great talk on Monday, or whether it's through bilateral donors. But then finally, there's a source of capital, a source of finance that none of us have really understood how to tap. And that, of course, is private finance. And this is incredibly important because in order for countries and us as stakeholders in those countries to build countries back better and to make sure there are environmental dividends from countries building back better after COVID in the face of climate change. Remember, there is no vaccine to climate change. We need to mobilize and attract private financing to make sure we have enough money at scale to do what we need to do to finally secure the incredibly rich natural capital of the Caribbean and elsewhere. So the question becomes, how do we do that? What does it look like to attract private finance? And we know that what private finance is after, understandably, is a return. And most private finance is after a financial return. They want to make money. That's okay. The profit motive is not a bad thing. We know that impact investors will swap some of that profit for an environmental or social dividend. Not all of the profit, they still want some profit, but they will swap it for environmental and social dividend. And some of those impact investors are exactly the type of people we want to attract. But of course, overall impact investing is a tiny, tiny slice of private capital flows. So we're never going to get to scale just with impact investing. And that's why thinking about private capital more broadly is important. And that's where the idea of blended finance comes in. How can we be more strategic about how we use overseas development assistance to de-risk what we're doing so that it suddenly becomes bankable, it suddenly becomes profitable, so that we can get private finance to come in at scale? That's what blended finance is. It's about strategically using overseas development assistance, development financing to attract private financing. And that can happen in many ways. It might mean using development finance to make the rules of the game much more credible, to even the playing field, so that good private finance can flow in because they can finally figure out, now I understand how things work, I can see how I can make a profit. So development finance can be used for that regulation, for putting the rules of the game in place, or for building the credible public institutions that can ensure that the private sector has a credible partner they can work with. It's another strategic use of development finance that can attract private capital. So too is using development finance to build public infrastructure that de-risks an investment because it brings down the price point. The private sector can come in and take advantage, like everybody else, of that public infrastructure so that they can end up selling a good, not necessarily consuming a good. It might be selling the ability to come and visit an incredible part of a beach using that public infrastructure. So there's lots of ways blended finance can help attract private finance. And it's that private gains as well. And there's nobody better than the people around this table.
Valerie, I've just stopped your video because it was getting interrupted. Please go ahead.
And so that's what we're going to talk about today. But let me go ahead and start. And I'm going to turn over to all our four panelists first, starting with you, Joan, to just spend 3 or 4 minutes that we can start people thinking about sort of the big question first of what are these things so we understand them, because they're relatively new concepts in the Caribbean. And then how do we make it work? So Joan, let me hand over to you.
Thank you very much, and good morning to everyone. And I have a horrible habit of speaking quickly, so I will try to be merciful to our wonderful interpreters. You have my gratitude. I also wish I were there in person. It would be lovely to be in the Caribbean, but here I sit. Anyway, welcome everybody, and thank you for the invitation. And Valerie, that was a wonderful setup for the conversation. I thought it would be helpful to do two things in my open remarks. One was to define blended finance and distinguish it from impact investing, so we are all clear from the start. And secondly, to walk you through some statistics on where blended finance has popped up in the realm of conservation finance, so that we have a sense of what the patterns are. It might be helpful for the rest of the conversation. So first of all, blended finance versus impact investing. You began to define it actually in your remarks. Essentially, blended finance is the use of catalytic capital, concessional money. Imagine grant capital from a USAID type of institution, or a very patient, flexible type of debt from a foundation. It's the use of that kind of money to attract private sector investment into areas that support the sustainable development goals, including life on land and life underwater. So the elements there are, of course, the catalytic capital to attract private sector capital and in support of the SDGs. So in a blended finance transaction, there may very well be 2 or 3 types of capital operating. Say a donor or a philanthropic organization that does not think about investment returns at all. What they are buying with their money is impact. They want a marine, marine area protected. They want a coral reef protected. They want a forest preserved. And they want agriculture to be done more sustainably. That money may be in the same transaction with a pension fund looking for a 3% return on their money with a low risk. So the idea is that there are various different tiers of capital and objectives behind that capital in the same transaction. So it's a structuring device. Impact investing is where someone in the equation says, I'm trying to get a return, but I also insist on seeing impact. That party is frequently a participant in blended finance. Sometimes they're actually the concessional, the catalytic money that draws in the other more commercial money. Sometimes they're taking a mid-level position and they're trying to do both. They're trying to get impact and return. So I thought that would be helpful to distinguish that up front. I'm going to focus mostly on blended finance because that's what Convergence focuses on. We are the global network for blended finance. We generate data, intelligence, and deal flow across all the SDGs, and conservation and climate turned out to be big subjects in our realm. So some statistics to help you. So we have the largest database out there on blended finance transactions that have occurred. And we draw from that database to share with the field some observations. So when we look at transactions that have touched on conservation in some way, here are some observations. First of all, in the time that we've been able to collect, which is probably about a decade worth of transactions, and these are only the ones we've been able to collect. I'm not suggesting we have every data point that exists. We know that there are over about $3 billion worth of transactions that have closed that were blended and that we have verified are blended. The median deal size is somewhere just under $90 million, which is interesting. That's a fairly large number. The most frequent shape that we see transactions in the conservation space that are blended, the most frequent shape is a fund. So this is a collective investment vehicle, a pool of funding that has raised capital from multiple parties. You have a fund manager, and that fund manager goes out and invests that capital into a number of opportunities and then returns the capital typically in 10 years, more or less. And Nicolas is familiar with this. This is the sort of thing that his shop might do. So funds predominate. In blended finance at large, forgetting conservation per se, but just all blended finance, funds show up about half of the time. So it's a little bit lopsided in this space. We know that development agencies, official development agencies, and multilateral donors like the Global Environment Fund are the most frequent sources of the catalytic money in these transactions. And we know that the deal sponsors, the folks putting the deal together and then going out and hunting for the various kinds of capital, are most frequently from the United States. I think you're absolutely right, Valerie. Local capital mobilization is important, both because it reduces the foreign exchange currency, the foreign exchange risk of a transaction, and because that money understands its own country and assesses risk differently. One last point is that the other pattern we see more in conservation finance than in other kinds, than in blended finance in other sectors, is the use of catalytic and donor money early on. So instead of all of the money being present at the same time in blended form, what we see very frequently in conservation is that a donor shows up first, or a catalytic party shows up first and operates for a while to create a transaction and get it to the market and get it to be investable. That is what we usually call design funding at Convergence. We actually have some grant resources of this variety, but we notice that that is apparently more needed in this space than in other spaces where the investment opportunity is more obvious from the start. So there's a lot of early stage work by those who can afford to lose all of their money to get a transaction up to speed so that it can attract more regular forms of capital. I'll stop there. I think that's been 3 minutes, and hopefully that's good ground setting for our other panelists. Thanks.
Oh, thank you so much, Joan. I think it's fascinating to understand the concepts better, because we're never going to get anywhere without that very clear understanding which you gave us. Thank you. But also those numbers. Only $3 billion of blended finance. If you think about that, even if that was an annual amount, it's less than 2% of all overseas development assistance. So blended finance is a very, very small part of overseas development assistance, which means it's an interesting way to think through that there's still lots of opportunity. But Nicolas, let me turn to you to talk from your perspective from Blue Finance. As one of these deal sponsors, what do you see and what can you tell us as some introductory remarks? Thank you.
Thank you. And thank you everyone for inviting us to participate in this meeting. Thank you, Valerie. Thank you, Joan, for making this great introduction about blended finance and where we are today in this approach. I mean, from our side, we will not have this wider vision. We really more on the field, and we're going to share with you one example of a blended finance facility that we just developed, for example, in Belize, but we have other projects in the pipeline and other projects already developed in the region in Dominican Republic. So basically, Blue Finance, we are a social enterprise. What we do is that we work with governments, local communities, local NGOs, to make the marine protected areas more effectively managed. Okay, that's one single mandate for Blue Finance, and we are focusing on this. The whole team of Blue Finance is really dedicated to this main goal: is to build up the bankability of marine protected areas. So bankability meaning that we want to.
Nicolas, I apologize to interrupt you. Do you have a fan on? Would you be able to turn it off? Because it's a little bit difficult to hear you.
I have a, sorry, what?
Is there a fan? Wind?
It's a wind. It's a wind. I can't turn it off. It's a wind.
Okay, no worries. Go ahead then.
I'm sorry about that. Okay, so we speak slowly. And I will also take care of how we interpret this. So basically, I think here one good example that we would like to share with this panel is a recent transaction that was closed in Belize, where we were able to secure 1.2 million US investment for one of the Belize MPA, the Turner Atoll Marine Reserve. This was a work done in collaboration between the Minister of Blue Economy of Belize, Mirova, Sustainable Ocean Fund, IUCN, and other donors around the table. As Joan mentioned, we use a classic blended finance facility, mixing catalytic grant funding with impact investment funding. The idea is really to develop with patient capital, with a clear vision of science, conservation alignment, and to ensure that the MPA will implement revenues for its financial sustainability. So this is not really a usual impact investment world, where we're dealing with a for-profit company, trying to make it with more positive impact. Here we're starting from a marine protected area, which is pure impact. We are building up the impacts of the MPA, but more importantly, we are building up a pipeline of different blue economy projects in and around the MPA that will provide sustainable financing to the MPA. So it has been a long communication with impact investors and with other donors, because this is a new approach where we are bringing, let's say, we just jumping from back street to Wall Street, but we really with a new asset class, which is a pure impact investment. So in terms of blended finance here, I think the design funding that Joan mentioned is really key. We need to leverage and we need to long-term preparation of any of these projects to be sure they are investment ready, to be sure that we reduce the risk of any transaction. We have to build up entrepreneurship also capacities into a world of conservation and marine ecology that was not existing. There will be a lot of it to share about. We are aggregating or developing, upskilling the approach in other locations that we'll be also very happy to share. But I think that's enough for introduction. Thank you.
Thank you so much, Nicolas. I appreciate that very much. And for those of you watching this, I'm beginning to keep a track of all the new terms we're hearing. We had deal flow and deal structure and deal sponsor from Joan. Now we've got asset class and leverage and de-risking from Nicolas. So there's lots of terms. There's a whole new vocabulary in this world of blended finance that is so important for us all to think about and learn, so we speak the language of those investors. But let me now turn to Angelique from SeyCCAT, another fantastic example of a blended finance approach. Angelique, over to you, please.
Greetings, everyone from the Seychelles. I am struggling to get a share screen facility. All right, I think I can do it now. Okay, so indeed, Seychelles is a small island developing state in the Indian Ocean. And we recently, with about 2017 or so, we graduated to a high income country. And as such, because of that, we found it very important for us to explore blended finance as a necessary component of the financing options that we have to finance conservation, climate adaptation, and the blue economy. So what you're seeing on your screen at the moment is really a series of transactions. There's about 3 in total that is showing a set of 3 sets of blended finance initiatives. So I suppose for purposes of the slide, it's really to show the number of actors involved, but I'll speak to the 3 various initiatives. So on one hand, we have the Debt for Nature swap, and here it involved an impact investor, the Nature Conservancy with its Nature Vest arm, supporting the government of Seychelles to undertake a debt restructure on more favorable terms with its external creditors at the Paris Club, with a policy commitment to protect 30% of the exclusive economic zone of Seychelles, as well as funding more ocean conservation and climate adaptation projects through an independently managed trust. And that's the trust I currently lead, the Seychelles Conservation and Climate Adaptation Trust. So we make sure the various parts of the deal are upheld. We make sure the impact investors are repaid. We make sure that there's an endowment, which is, of course, a long-term investment that will mature in 20 years, where we will get a new set of financing being made available. We also have the Blue Grants Fund, which is a sinking fund, and that's the proceeds we use to go towards funding ocean conservation and climate adaptation projects. So that's one deal. And you can see the variety of actors here. You've got external creditors from the Paris Club, philanthropic organization as a Nature Conservancy, the government of Seychelles, and an independent trust as SeyCCAT. The other deal is, the other mechanism is the Sacial Sovereign Blue Bond. And here we've got a government issued bond of $15 million US. And in order to de-risk the deal, to bring the interest costs down, we had support through a partial guarantee from the World Bank, as well as a concessionary loan from the Global Environment Facility. And we do receive support as we go along through a swallow fish, Southern Western Indian Ocean fisheries project in the Seychelles. With the blue bond, SeyCCAT on our part manages 20% of the proceeds, so about $3 million US over a 6-year period that is channeled to our Blue Grants Fund. And every year we're able to make available $700,000 US as grants financing to various ocean stakeholders. And now I'm going to touch a little bit about, and here, you've seen the GEF, you've seen the World Bank as the various actors involved in that deal, as well as the government of Seychelles. But I think now I'll move a little bit on a final point with regards to the engagement of private sector. That really is critical. And what we found is another component of the blue bond is where the Development Bank of Seychelles is managing $12 million US, and that is a loan facility where they are providing private investors who want to be part of the transition to sustainable fisheries. And I didn't mention this, but it's critical that it's a $15 million bond, but the proceeds have a purpose. They have to go towards supporting Seychelles' transition to sustainable fisheries. Now, the Blue Investment Fund, administered by the Development Bank of Seychelles, gives private sector an opportunity to be part of that transition. And here we're thinking about the creation of new livelihoods, generation of more revenue, and really thinking about how businesses are part of that transition through value addition, sustainable aquaculture, and so on. What's interesting about this as well is the fact that there are milestones very much linked to having governance and regulatory frameworks in place in country as well. But another on a different note, but similarly interesting, is for the first time in 2021, we have a local private business providing funds to the Blue Grants Fund. So before it was, this blended finance mechanisms of the debt swap and the blue bond, and now we're having local stakeholder buy-in from a private business. But what's interesting in that it adds a whole level of new value is the fact that it's not only funds, because it is locally based, they are also providing mentorship to whoever is granted their blue business grant. And that adds a different level of value and shows how we're having a real buffet of financing opportunities being implemented in the Seychelles. I think I'll stop there. Thank you.
Thank you, Angelique. And I have to say, I agree with Karen Penton, who wrote in and said, this is just amazing. And it is quite an amazing buffet that you have created with lots of different players. And I have so many questions, and I'm going to come back to you in a minute with a few of them. But first, Viviana, let me turn over to you. You're a conservation finance specialist. Tell us a little bit about your thinking and your learning on this topic of blended finance and impact investing.
Thank you very much, Valerie. I want to talk a little bit more about impact investment, because I think blended finance has been covered quite well already in the introduction so far. First, thank you for the great introductions and for the secretariat of this great Congress for the invitation. I want to check if my screen is sharing.
Please, could you go ahead and share again?
Okay. That should be better, right?
That's great. Go ahead.
Great, thanks. So this has already been mentioned, but I thought this slide would be helpful for people in the attending who haven't really heard about these different types of private capital, and I think all the terms that we have been throwing at you this morning. So it has been already explained that you have here on the right end, you have what you could call philanthropy and impact only private capital, who basically are looking for impact and not really returns. And on the left side, you would be seeing the financial only, so let's say the more traditional banking. And somewhere in the middle, you can see here from responsible to impact moving. And impact is basically a rising, impact investment is a rising investment class that goes beyond just minimizing harmful outcomes for the environment or for the society, and is looking to actively create positive results that also contribute to social and environmental solutions. Impact investors, that has already been introduced, are basically seeking to place capital in assets, businesses, not-for-profits, for example. And they are funding industries like renewable energy, sustainable agriculture, aquaculture, fisheries, manufacturing, etc., or infrastructure. And what I think is really important to see from this slide is that private capital has many colors and many shapes. And when you talk about blended finance, you are trying to mix this into a transaction that will de-risk or increase returns. And when you're talking about impact investment, is basically this part right here that is looking for competitive financial returns and impact, and sometimes maybe even below financial returns. And how does impact look like? So this is an example of an impact approach for the climate asset management, where I'm a consultant at the moment. So this is how the impact approach for investment in nature-based solutions for carbon creation looks like. So on the one hand, you can see that projects where they invest will need to meet high criteria on quality. And on the other hand, and this is the impact, they have to create long-lasting benefits. So we're talking about biodiversity and social impacts, like sustainable livelihoods, protection of species, restoring habitats. And what is important about this is that when you're talking about investing and impact investment, you need to really think that measuring and monitoring impact is a key aspect of this. And this, I think, is really important for everybody that's considering this as a source of capital. You would really need to look about what is your impact? How are you going to measure it? How are you going to monitor it? And there is a key for me, an interlinkage here with the surge of all kinds of natural capital approaches, because now we are seeing that natural capital is at the basis of our economies. And as Valerie said, for the Caribbean and island economies, this is even more important. And when we are starting to understand natural capital, when you're starting to measure it and value it, then it becomes a little bit easier to translate that into impact indicators that they will also link to the investment. So I just wanted to touch upon these concepts, and I think I'll leave it like that. And I'm sure we'll discuss challenges and other things in the rest of the discussion. Thank you.
Thank you so much, Viviana. Indeed, I think there are so many wonderful questions that are coming up that we will have lots and lots of space to discuss. But I wanted to start with some of these questions, going back to you, if I can, Joan. Where does all of this start? For many of the organizations and the individuals listening in today, given all of the data collection you've done on blended finance operations, on deal flow, where would you suggest they start?
Well, it depends on who the who is in your question. If you are a fund manager or other financial intermediary, you need to have a pretty good understanding first of the private sector money that you're trying to chase. What are its return requirements? What are its scale requirements? What is its risk appetite? And then you need to actually backfill from there to what is possible. That is, what are the opportunities and what is the risk profile? And then it's donor money or philanthropic money that can fill in the difference between the opportunities available and the characteristics needed by a private sector investor. That's if you are the financial intermediary, the folks putting a financial transaction together. If you are a donor, the question starts from a different place. And if you're a government, the question starts from a different place. I think if you're a donor, there are principles of blended finance that have been put out by the OECD member countries, who are the big donors of the world in the official world. And they have put out principles that are pretty reasonable. They say things like, consider what the local, what is the local voice in this transaction? Consider additionality. That is, would this thing happen anyway without you putting this precious money into it? They consider minimum concessionality. What's the least amount of help you can give a transaction to make the private sector leap to attention and say, yes, I want to invest. So from a donor's point of view, the questions are how to allocate your precious money in a way that actually drives additional investment. And if you're a government, the questions are different again. So it really depends on who you're trying to give advice to. I'll stop there, Valerie, just in case I've missed the point of your question entirely.
No, not at all. Thank you, Joan. I think that's very helpful. And I think it reminds us that where you start depends on where you sit. And that we first have to know who we are and what our role is. And then basically think about understanding that deal flow and where we sit in that deal flow. But Nicolas, I wanted to turn to you again. We've had quite some questions. We've had one, for example, from Moulay Tous, and forgive me, Moulay, if I'm mispronouncing your name. Where did you start and how did you convince investors to get involved in protecting a marine protected area in Belize?
Okay, that's a very good question. So first of all, my apologies for the previous talk. It seems to be very windy. I'm in one of the ranger stations on how marine protected area in Belize. So I try to close all the shutters now, so it should be better, I hope. So very briefly, I think it's important to know where we came from here. So the idea of a marine protected area is really a fishery tool and a marine conservation tool. So this is to develop what we call impact. Okay, we are here to improve fish biomass, coral reef, livelihood of fishers, in some case, some mangrove restoration for blue carbon. So the role of Blue Finance is to sit with governments and say, okay, you have a network of MPAs in your country. Some of them, in cases very specific, can become self-finance or can reduce the financial burden for your public budget. So we sit with government and we decide, okay, maybe over your 10 MPAs, I'm just taking the case, for example, in Belize, you have 12 big MPAs, including some World Heritage Site. Some of them have capacities to develop revenues around ecotourism, sustainable ecotourism, around blue carbon, mangrove restoration, mangrove conservation, around sustainable fishery or aquaculture. All of this has to be done, obviously, with a good alignment with conservation. So it has to come from the conservation and sustainable fishery side. And what we do as Blue Finance is to make it bankable and to translate it in something that investors will be confident and will understand. Okay, so that's not obvious. We're not a for-profit company selling something to a market with a clear customer base and a market upscale. No, we are more like a high impact, low return project for any impact investor. So I think it's important here to know what we are dealing with. I think when we say impact investor, this is what we learned the last 5 years. For Blue Finance, for how MPAs, impact investor is still too much on the side of investment, commercial investment side. Okay, we have to deal with very specific impact investment funds that are more looking at or invest for impact more than invest with impact. Okay, so in that case, what we're looking for how MPS is debt is concessional debt that we can pay back on the long term without too much financial burden for the projects, with, as Joan mentioned, some catalytic funding at the very beginning, because the MPA, the marine protected area, is not going to develop revenues suddenly from sustainable tourism or aquaculture in 1 year or 2 years or 3 years. It takes time to make things sustainable, to make things bankable. And the market is also complex with this approach. So I think from his stage, and we are dealing here with this specific asset class of marine protected area on this blended finance. So to answer to your question, the impact investors, I think we have touched inside the world of impact investors only a very tiny part, maybe 5% of these impact investors. The rest of them, I think we will not be attractive, never for them. Okay, we are not a high return project, we are a high impact project. So that's why we need the impact investors. We want them on board. They bring us a lot of financial discipline, a lot of financial leverage also. But I think their role will be to sit with other concessional debt financial or catalytic grants.
No, thank you, Nicolas. I think that's a great example of just the multitude of players and identifying what the return is. What is the comparative advantage in returns? Is it a financial return? Is it an impact return? And then thinking about, once you know that, who the investor is you chase. Is it an impact investor? Can it be an investor? Because you do have a serious financial return. And in fact, one that Marianne Teo and Keisha Farnham have brought up, and I want to put to Angelique, is around timeline. All of this deal flow sounds very, very complex, time consuming. You need the financial intermediaries like Blue Finance. Angelique, how long has it taken to put together the buffet you talked about in?
All right. Sorry. I'll answer the question. I think you were cut off a little early for me. So how long did it all take? The discussions on the debt swap started in 2012, and the deal closed in 2016. So we're looking at 4 or so years to get the deal closed. So I think it's worth, always thinking about that this is also patience is also very important in this process. In terms of the blue bond, that began after the debt swap, and it took about 3 or so years to complete the deal. But I think absolutely it's the many intermediaries, the many lawyers involved, the many various sort of designing of the structures and the vehicles has taken a long time, even to put together SeyCCAT, for example, which was created by an act of parliament. So you're already going through a process of legislation as well to get the National Assembly or your parliament to pass legislation. So it is it's a long-term game.
The Seychelles, what's your timeline? No, thank you, Angelique. And I think this is extremely important for everybody to realize around the table today, because, we talk sometimes around impact capital. There's also such a thing as patient capital, and figuring out who are those investors, who are those partners who are going to be able to sit with you for 3, 4, 5 years as these deals come together, who can continue to pay the salaries, who can continue to have faith that this will happen. So I think it's so important, again, to look at the ecosystem of partners and identify who brings what to the table. But Viviana, I wanted to go to you. We talk a lot about returns, and we talk a lot about understanding what the different partners bring to the table and what different partners want in terms of return. And I thought your slide was extremely helpful. But even under impact investing on your slide, it did show that impact investors want a financial return, sometimes sub-market, but they do want a financial return. What kind of returns do you see, and how do you advise NGOs, for example, who are working to protect natural capital in the Caribbean? How do you advise them to think about those returns and to think about making what they do attractive to private investors?
Thanks, Valerie. I think you mentioned two key issues, partnerships. I think these deals, as everybody has mentioned, are complicated. They involve basically combining 2 worlds that are still very separated from each other. So you're talking about the financial world and the conservation world, who are still speaking different languages. It's getting together, but still a world in between. So I think that the returns would really depend on I mean, as you may know, each investment fund or each bank will have a different return on what they need to get. But usually you're talking about 6%, 7%, sometimes even as high as 10%, and that can go lower, of course, if you're turning to more. I think what Nicolas said was interesting: investment with impact, or investment for impact. So I think that's a good division. And what I think is important, and what we try to what I've been talking when we work with NGOs or nature managers, is that they need to start seeing their conservation efforts less as charity and more as a business. So basically, you are protecting capital, natural capital, and that cannot be done for free. And of course, there are always going to be things that cannot be financed with private capital. But it's like starting with a change of mind of how conservation efforts are being done, and also an understanding that if you want to attract private capital, you need to think about creation of activities that will generate an income or a return, because otherwise private capital will never be involved. Even if it's a loan, you will need to pay that loan somewhere. And what we have done a lot with, especially in the Caribbean, is starting to think with small activities. We have worked, for example, with some protected areas that have, for example, a water lab. And they used to do water lab, water testings for hotels for free. So why don't you start charging for that? And maybe you can increase your services to other areas in the island, and maybe you can get a loan for that. So there's still, I think it will be, there are a lot of incremental things you can start doing with small activities, and probably Nicolas have found the same. It might not be easy to start largely at scale unless you start with a big, for example, blue carbon project that covers a whole set of islands, or island-wide if it's a big island. But there's still small things revenue generating. Of course, fisheries is a good example, aquaculture, and environmental impact assessments, which is also something that some protected area managers do and still do for free, where you can start thinking about revenue generating activities for which you can get investments. I hope that answers the question.
No, thank you, Viviana, very much. One question, and I want to stay with you for 1 minute, that came into us from Sybil Reedmill, has to do with private protected areas. Do you see these as an approach to blended finance, or is this something different? Is this one of these sort of moving away from charity to business, or private protected areas one way of doing that, or is this something different?
Well, I think, I mean, in the end, the objective, and I think that's something we need to underscore, is that blended finance or impact investment is not the solution or the recipe for everything. When you're talking about conservation, you need to start thinking, okay, what do I want to do? What is my objective? And for that, you will have to look at a menu of financing, but also a menu of conservation measures. And private protected areas, I think, will always be a part of the menu for conservation. And the question is, how are you going to finance the protection? That's the second step. I mean, you can create the area, and how are you going to finance it? I haven't come that many, or I don't have a lot of experience with private areas in the Caribbean. I know the experience from Costa Rica, where I'm from, and they have been really successful in mainly ecotourism. Research is also a huge source of financing if you develop it well. Like paid research, PhDs, etc. So that's also something you could use to create your area. So I think that there are two layers to that questions. Yes, private protected areas are a good way to get to the objective of conservation, but how do you finance it is the second step. Whether impact investment or blended finance would work for that, it would really depend on what are you planning to do with that area, and whether there would be any sources of revenue you can generate from that.
Yeah.
No, thank you, Viviana. And I think that reminds us of a key question, which is that of all the questions we have to ask, blended finance or impact investment may not be the answer to how to raise financing. So first we have to understand, what are we raising finance for? What kind of finance? Are we looking for input-based financing? Are we looking for output-based financing? Which one of our guests has just brought up as a question in the questions and answers. What kind of financing? Over what timeline? And I think this is something we really have to help disaggregate. But I want you to go and follow up on another point you had, Viviana, where you talk about this need to move away from thinking about conservation as a charity to thinking about it as a business. Nicolas, you talked about the importance similarly of an entrepreneurial mindset to do the same thing, to move away from thinking about ourselves as charities to thinking about ourselves as businesses when we work in conservation. What do you see as the key aspects of entrepreneurialism that are important skill sets that we all need to learn?
Okay, that's a very important point. I mean, yeah, we have to be clear. Okay, just before I forget, on your previous question, I think it's a very important point. When we say private management of protected areas, I think it's important to mention that for the marine side, it's always non-profit. Okay, most of the cases, I mean, except some very rare exceptions in the world, in Southeast Asia, what we're exploring also, but most of the other cases that we are dealing with in the Caribbean is a co-management agreement with government run by a non-profit organization, so an NGO, that has a mandate to realize the day-to-day management of a marine protected area. So all the regulatory, all the police functions are still under government. This is not questionable. This is not even a concession. There's no lease of anything. The only thing that the government is delegating is the management of the protected area. I think it was just important to mention this because some people can become a bit upset, and it's totally understandable. Here, the blended finance approach or the impact investment approach does not require a government to make a concession or a lease on any piece of the sea or coastal area. Okay, we just wanted to make this mention. So that helps us to answer to your question. What we do as Blue Finance and with a team of experts we have inside Blue Finance and with our local partners is really bringing up this entrepreneurial approach, but from a non-profit point of view. Okay, so we have already selected some staff inside the MPA that we call business developers or citizen science officers, but always have, let's say, I would say, still very much in mind the conservation and the scientific point, but have also a background in project management, in marketing, in tourism enhancement, or in general as a project developer. Okay, so I would say that the main skill that we have to develop depends on the revenue mix that we have to develop in each MPAs. Most of them we are dealing with nature-based tourism, so we have to develop some of these capacities inside the rangers or inside the team to deal with the flow of tourism or to design specific products for them. We will have also some approaches with sustainable or responsible aquaculture in and out the marine protected areas. So you have also to get this entrepreneurial approach to size the market and to be able to respond to all the supply chain that is needed in any of these businesses. I want to punctualize that here what we're trying to create is some kind of a new entrepreneurial approach. I think we talk about this, it's like we have the private sector, the public sector, the non-for-profit or charitable sector. We're creating a fourth one. It's not us, this is a general trend, which is more like a social entrepreneur, which has a clear mind of bankability. I'm here to make things financially sustainable. So I'm not here to use a grant and after 2 years to ask for a new one. No, I want this to have a proper business model, a proper revenue model, but none for profit. I mean, all the profits are reinvested into the project. And that's a different mindset, but believe me, we find so many people that wants to do this, that is wonderful. So we just have to create the vehicle and to make it work behind. So we're very glad now that Blue Finance projects have taking off. We are really in the middle of the action, creating this baseline and this pipeline of people and social entrepreneurs around marine conservation.
No, thank you, Nicolas. And I think it's so important. One of the complaints we've had in conservation and conservation finance for decades is exactly the boom and bust of grant financing and project financing that is great while it lasts, but then it's gone. And this idea of thinking about becoming social entrepreneurs, where we have the business model, we have a revenue model, but we do it in the service of conservation and the service of uplifting communities on whose shoulders rests the protection of natural capital, I think is such an important mind shift. But Joan, if I can come back to you, related to what Nicolas was saying, and it comes to a question that Rick Warner put in the question in the Q&A, which has to do with how do we measure that social entrepreneurial sort of mindset in terms of what is a non-financial return and how do we measure it? I know in Convergence as the global network for blended finance, you've done a lot of thinking on this. So what are the best measures? Are there measures that are accepted by everybody, just as there are measures for financial returns? Are there measures for environmental returns, for example, that are accepted by everybody? Or what do these communities, these NGOs, these groups who are listening today need to put in place to make sure that they can showcase that environmental return model, just as they can show a revenue model?
The short answer to your question is no, I am not aware of a universal standard. However, the opportunity that blended finance structures present is if someone who's hunting for impact, a government, a donor, a conservation society, can somehow tweak their mindset a bit and imagine that the impact they are seeking is the return, and walk into these structures with a hard negotiation stance, I think that's where you get the best results. So what I'm talking about is your capital doesn't need a financial return. So what is the price of your capital? How many mangrove acres, how many fisher communities, how many coastlines, how many coral reefs, how many whatever units of impact are you seeking and over what timeline? And demand it and get it into the financial documents, get it part of the terms and conditions of your money, as if you were saying, I am a lender and I want, a principal repayment every 6 months and this much interest rate. So you have to get into that investment mentality, even though your money is not financially seeking a return. So I would just suggest that. I want to go back to a couple other things that the other panelists have raised just briefly. We talk about a revenue model and entrepreneurialism and the fact that blended finance is not suitable for everything. And I just want to heartily endorse all of those points. You would think that we would push blended finance at everything, but it's not appropriate for everything. The only way it works is if somebody with an entrepreneurial mindset, be they a government official or someone in Nicolas' line of business or a Conservation International or the Nature Conservancy, they have to take that entrepreneurial mindset and ask, how do I make a revenue stream? So think about Angelique's proposition. Somebody saw not a problem, but an opportunity and a revenue stream. You had a highly indebted government that was not making good on its debt, but was actually willing to pay something to somebody. That's a revenue line. So somebody had the entrepreneurial idea of going and buying that debt from the Paris Club at a discount, getting enough grant money as part of the money it used to go do that so that it could restructure the debt, elongate it, make it easier to pay, and then demand impact outcomes. You're in default of these notes if you don't protect your coral reefs or whatever the deal was. That's very entrepreneurial, and that's identification of a revenue line. Marine protected areas also have to come up with a revenue line if they're going to be privately invested in. Is it tourism? Is it somebody who cares about the natural capital as a buffer against weather events? What is the revenue line? And only when you answer those questions do you have a transaction. And it does take entrepreneurial thinking, and it does take thinking about the impact of it. And also very briefly, the timeline, that's a pretty important thing. A lot of donors will come say, well, I want the impact in 2 years. And you're not even going to have a revenue line for 5 years sometimes. somebody has to cover that cost and somebody has to pin the outcomes to a longer timeline. This is not an investment proposition that's going to be an easy flip in 1 year at 2 times your money. These are long haul ideas, and we all have to use the more concessional money in the equation very patiently and carefully and over a long haul. You talked about the boom and bust cycle. That does not work for finance. So just a few points to think about.
No, thank you, Joan. And what's an example of one of the best funds? You talk about half of all the blended finance sort of deal flow you see is around funds. Is there a good example of a fund that you could point to that all of our listeners here could go out and do a little bit of research on to understand exactly how that fund put together those ideas and thought about timeline and thought about revenue flow?
There are several, and I'm sorry, I don't have one off the top of my head. But typically what you will see is a fund manager that has identified an asset class, to get to Nicolas' word, that is, I am going to go invest in tracts of forestry. I am going to go invest in sustainable fisheries. I am going to go invest in reduction of plastic use that ends up in the ocean. And the theme they choose is a big enough theme, big enough in terms of things out there to invest in and big enough in terms of number of countries, so you're spreading out your risk to attract commercial investment. So there is actually a fund out there that's investing in the reduction of introduction of plastics into the ocean. There are funds out there who do nothing but forestry. And many of them do have a blend in them because of that need either to cover additional costs of the fund manager structuring all these complicated things, or to provide a bucket of technical assistance money to support those communities they're investing in to become whatever, better borrowers, better stewards of Mother Nature, what have you. So there are a lot of examples out there, and I may be able to pull up a couple while we're on this conversation.
Valerie, can I add something to that question?
Please, Viviana.
Yeah, there's a type of funds we haven't talked about, and it relates to a question on the chat, the conservation trust funds, which is one of the reasons we're here. And I just wanted to clarify that the funds that Joan are talking about are not these conservation trust funds. These are funds that are structured specifically for these type of transactions as collective investment vehicles. But having said that, I think that conservation trust funds could play a really key role into blended finance and impact investment transactions in 2 different ways. One is they could be the vehicle that is used to manage these transactions, like the Seychelles is doing. And once in this case of the Seychelles, they had to set up the conservation trust fund, but in a lot of countries, their conservation trust funds are already there. So there's a lot of transaction costs that you would not have to incur, and there's already the financial capacity there. So one is they could work as the vehicle for structuring these transactions. And second, they could also provide the philanthropic or catalytic capital for technical assistance, for de-risking, etc. A lot of them are actually also moving into impact investment, so they have their knowledge in-house as well. And they are sources of national capital and national knowledge. So I just wanted to mention that before we finish, so that we don't forget the roles that CTFs could play in this type of approaches.
No, thank you, Viviana. I think it's absolutely critical because it goes again to this idea of us needing to learn new vocabulary. Because when we talk about funds, we're often talking about investment vehicles when we're talking about blended finance. But in conservation, when we talk about funds, we normally mean conservation trust funds. And so learning to listen with that blended finance ear is so important. And I agree with you that there are so many roles that conservation trust funds could play. And I would even add another, which would be to help put together the kind of environmental MRV, monitoring, reporting, and verification scheme, to be that intermediary, to be that credible player who can measure environmental returns in a country. specifically because conservation trust funds are partnership platforms. They have the buy-in of government. They're often nationwide, and that they can begin to put together the kind of infrastructure to measure those social entrepreneurship indicators that social entrepreneurs want to see in terms of environmental and social returns. So there's lots of different roles for conservation trust funds, whether it's financial intermediaries, as credible MRV reporting institutions. And I think it's something that we should definitely talk more about as a community. But Viviana, since I have you online, I did want to ask you a question that Maya Trotz brought up, which is about the role of remittances. And this is specifically true, I think, in the Caribbean, in a place where the amount of remittances far outweighs overseas development assistance, far outweighs any kind of other direct foreign investment in terms of private capital. Do you see any role for remittances as being part of the ecosystem of financial flows that could be used for blended finance?
I mean, my understanding of remittances is that these are monies from nationals of these countries that have moved abroad, and they are sending money back to their countries. And I understand that most of that is usually to either support their families or pay for expenses they still have in their own country. So for me, it would be difficult to think, how would you deviate those? I mean, how could you tap into those funds if they are usually sent back to their countries with already a specific purpose? So I don't know if anybody in the panel has another idea for that, but for me it would be difficult, because usually these are funds that are used for family support or other kinds of purposes.
No, thank you, Viviana. And I think you're absolutely right. And again, it's another reminder to us that just because something is on the aggregate very large doesn't mean that its purpose necessarily fits with conservation. But it does speak to the fact that we need to remember that there is still a role for domestic resource mobilization and thinking about tapping nationals for financing and thinking about finding social entrepreneurs among some of those recipients of remittances. We don't always need to look to the sort of US-based companies that Joan was talking about being the majority of these sort of institutions involved in blended finance. Perhaps there's a way to get locals involved as well.
Can I jump in there? Because we've actually seen, we do operate a design funding window. We manage third-party grant resources, and we look at very early stage ideas that we think would be useful to the field and can attract commercial capital at some point. We have received a couple of really interesting ideas from teams working with remittance flows. We haven't announced anything yet, but we've seen proposals, for example, to create vehicles so that the remitters can help those on the receiving end, typically their families, to invest in things that make their households more resilient, the physical homes to protect them against storms. So that flow works if you blend it a bit and protect you can actually attract banks and others to double down on that flow if you protect them a bit with guarantees or other kinds of concessional capital. They may be willing to take the bet that household, returns the money at some point. So you can combine remittance flows, grant money, and commercial bank money in concept, and we are working with at least one party that is working on that kind of idea. But there's also other forms of local capital. Don't forget there are pension funds in these Caribbean nations. Those pension funds must put their money to, they have to pay out Mr. and Mrs. Smith's pension money Tuesday, the 14th of July in 22 years. What are they doing with the money right now? They're probably investing it in something very safe, but it may even be a negative return right now. So if there's anything, they can take one small slice of their money and invest it locally in something that is conservation minded, they may be interested. They are very risk averse and they need to write very large check sizes. So this takes a lot of financial engineering to perhaps pool multiple opportunities, aggregate things. There are all sorts of financial tools that would have to come to bear to take the conservation idea that has the cash flow and turn it into something digestible for a local pension fund. But it is doable, and that money is there, and it needs a place to go. So there's a financial puzzle for someone to solve.
No, thank you, Joan.
Valerie?
And I think if,
Yeah,
please,
okay,
Nicolas, come on in.
Okay, yeah, I just wanted to add here, there's some kind of missing middle here, because we see from outside as a project developer what kind of pipeline we can develop, and really the ticket size, to use a vocabulary from investors, is extremely small. I mean, how MPA projects, if we blend it, that means that the impact investor will invest less than $500,000 or around this, which is a very small transaction for all the due diligence, all the transaction costs they have around, and it's normally much under the radar. Okay, so we need at some point to find solutions to aggregate several projects together, even if it is different geographies or different countries, because investors are not interested in very small transaction by itself in terms of risk, in terms of many aspects. So I think here we have to think out of the box. You were talking about conservation trust fund that might have a role to play here, not as an endowment fund, but more as a sinking fund or as a fund management that will be able to channel some of the money received from impact investors and after distribute it. This is what we're exploring, for example, in the Mesoamerican Reef with the MAR fund, which is also going to work with a global fund coral reef. Which is an interesting initiative trying to blend finance and to think as a catalytic with a commercial or impact investment behind, trying to put everything together. So I think not everything is already set up on the table. We have to think out of the box, we have to design. I think having partners also like Convergence helps a lot to provide experiences in other countries and other places, and to give confidence also to investors, because they knew also to this market, they're sitting on money, they have the impression they want to do good things with DG14 or other DGs, but there's something missing into it. We can bring them small projects, nice projects, but they want to have a bigger image. And this is Wall Street. From the very beginning, when we started Blue Finance 6-7 years ago, they were already talking about $100 million. And I tell them, $100 million for what? Because my project is $500,000 for one MPA. So that's a lot of my MPAs, and I'm not going to develop all of this never. So the point here, I think we have to use all these different actors to aggregate and to develop this kind of facilities. I'm very confident this is going to happen in the next 2-3 years.
No, thank you, Nicolas. And I think the idea of aggregation is one that is critically important, particularly for the smaller islands in the Caribbean, where the deals are not that big. When Joan talked about the average deal size being $90 million for blended finance, that's simply a size that's probably too big for most of the islands. And so how do we think about aggregation? How do we think about some of the roles of the regional rule setting bodies? Is there a role for CARICOM? Is there a role for the Organization of Eastern Caribbean States, the OECS? What other sort of regional rule setting bodies can be deployed? How can we get the Caribbean Biodiversity Fund, our big sponsor here today, to think more broadly about how to be an aggregator of deals? What would that look like? We had please.
I was excited about the idea. Sorry to jump in, but one large scale financial instrument that may be worth thinking about in this context where scale is such a struggle, it is in the Caribbean, are sustainability bonds. And they can be sovereign. So a government of a country issues a bond into the capital markets. And the way it gets blended is that someone steps forward and says, we will absorb part of the interest rate payment, or we will do something to sweeten the deal if and when the proceeds of that bond are used to achieve particular outcomes. So you could imagine the Ministry of Finance issuing the bond and the Ministry of Environment agreeing to make X amount of progress per year for 10 years towards some objective. I'm terribly oversimplifying, but you get the idea. So the bond interest rate is 8% off the cuff, but if they achieve these things every year, the interest rate will be only 6%, and some donor out there is paying the investors who bought at 8% that difference of 2 percentage points. Just in concept, that's how these things work. And that's a large enough number. You can float, a bond that's quite large, and it can be spread across a lot of different activities. It's a single transaction, and it's very vanilla. That's one example of something that might get to scale, because Nicolas is right. So much of the stuff he sees needs a $50,000 investment, $100,000 investment. There's no way you're going to get commercial money into that equation. It's just not even worth hiring the lawyer for the deal.
No, thank you, Joan. I think it's important, and it reminds us again that the answer to every conservation finance question is not blended finance, is not commercial finance. Sometimes it has to do with scale, and sometimes it has to do with what the government appetite is, because I know one of the biggest challenges in the Caribbean is debt, and just very large debt, and how willing or able are governments to issue bonds, or how much do we have to look elsewhere for financing? And I think that becomes the key question, and why, again, it's so important to talk about partnerships. And that's why, Angelique, I wanted to bring you back in, because in addition to that sort of great buffet you showed us of different revenue models and revenue streams that SeyCCAT is at the heart of for all things blue in the Seychelles, the role of government has been fundamental. And I wanted to ask you to give us a sense of how important the role of government was, how they remain engaged, even as you work with different investors, impact investors. There was a bond issued. How important is the role of government in all of these pursuits?
Extremely important is the short answer. Government, one of the things that we've found, and we've done a lot of analyses on this and a lot of reflections about what made sure that the debt swap happened, what made sure that these deals went through, and political will at the highest level is always the answer. And this is something that's extremely important to capture. But it's worth remembering that it's just not a trigger to close the deal. Political will throughout, in terms of us administrating the funds as well, is equally important. The reason I say this, and an example of SeyCCAT is on our board, we still have the Minister of Finance as well as the Minister of Environment who sits on our board, right? So you can see those are our two sort of key ministers being in that realm of both worlds. And it's important in the sense that they continue to assist in giving policy direction in terms of what are the priorities, or maintaining that connection with the engagement framework that we have, maintaining that, okay, the blue economy or conservation remains a priority. But I think what really is interesting is it also, although the Conservation Trust Fund, or SeyCCAT in Seychelles, we started off just with the debt swap, we've been able to diversify our portfolio, and that has been as a result of continued political will by the government. It is not typical that somebody comes straight to SeyCCAT and says, oh, I'd like to support this, this, and that. They want to speak to the government official. They want to hear it from them that there is that interest and will to have something like this develop. And then they sort of say, okay, now please go to SeyCCAT and you go on and negotiate the deals, and then we can circle back. So I think in that respect, government remains a key, an important player throughout, and you require that engagement. And one of the things that, it's just worth sharing as an experience that we've had, we recently had elections, and it led to government change. And inevitably, many of our donors, in fact, even on election day, called me and said, what does this mean? So you can already see that the donors, their investors, are already aware of the importance of having government involvement for many of their investment to really see those impacts, whether financial, economic, or social. And, at least we've seen that there is continued engagement, but it is one of those risks that is associated to these deals.
And Angelique, how do you continue that engagement during a government transition, for example? What do you do as SeyCCAT to make sure that the incoming administration not only understands what you're doing, but buys into the idea and continues to want to have that active role on the board, for example?
Yeah, so you need to socialize the ideas. Some ministers, for example, are very new to the concepts, whereas on the other hand, you have those who are not new to the concepts and they had been following the developments as we go. But it's very important to take the time to socialize them to the ideas, but also to strengthen your relationships with the government. So, for example, new governments are sort of thrown in, and they have to start going to the media, or they get lots of interviews, or they get invited to webinars. But providing them with those key talking points to sort of help them along is also a key function that we do have to play. But most importantly, it's really showing them the benefits, and the benefits are wide ranging. And sometimes you do have to tailor your presentation based on whether you're speaking to the finance minister versus the environment minister. But that's all part of the role of being sort of having feet on both sides of the story.
I think that's so absolutely key, Angelique, this idea that not one size fits all. And that as conservation people, we have to be bilingual, because we're talking about returns, but what the Minister of Environment is interested in, or what an impact investor is interested in, might be different from a local commercial investor or from the Minister of Finance. And so learning to speak the language of the investor we're trying to attract becomes absolutely so key. So I want to ask one last question to you, Nicolas, and then I'm going to come back for some closing thoughts from each of our wonderful panelists. But Nicolas, we had a question from Martin Roman, who basically asked about the revenue models you talked about and the need for sort of revenue streams, which we all agree is critical. How do you think about those in very isolated communities in parts of the Caribbean where the marine protected area may be very, very small? There may not be the public infrastructure to bring tourists to the site. Are there places where there just aren't revenue models that can be invested in?
That's a great question. I think, yeah, let's be clear. We have 20,000 MPAs in the world. What we're trying to do from our approach, the idea, is not going to work for very far from all of them. I mean, we're targeting maybe 5% of these MPAs that have capacities to become bankable and develop sustainable revenues. Okay. So for these remote islands, remote MPAs, without any of the blue economy sectors around, talking about tourism, talking about blue carbon, we are exploring some solutions with sustainable aquaculture, just to reduce the pressure on the wild stocks for finfish or for other fishery. Models are more tricky. It's a bit harder. So I would say that at some cases you have to be modest and say, no, this MPA has to be, it's a public domain, it's a public tool. It has to be financed by government. What we can do with our initiative is to reduce the burden for government, financing some other MPAs in the network that have these capacities to become bankable. So indirectly, we are helping these MPAs that don't have these capacities to produce revenues, freeing some limited resources from government.
No, thank you, Nicolas. And it's another great reminder of the roles of conservation trust funds, for example, where sometimes that revenue from conservation trust funds should be used to support those protected areas or those places in nature where you're simply not going to be able to make bankable revenue streams. But they are just as important as other areas when it comes to conserving nature. So listen, this has been fantastic, everybody. And I want to give everybody, all of our fantastic panelists, a final sort of 1 minute to tell us, what are your closing thoughts? What does this mean for the Caribbean? Do you have any, here's the first thing you should do, advice for us as we're listening in? So Joan, why don't I start with you?
Well, first of all, on our website, we have an awful lot of resources that may be useful to people, data, case studies, and so forth, and that's www.convergence.finance. Just bigger picture thoughts for you. I hope I've conveyed that blended finance actually is not a niche. The conservation uses blended finance pretty regularly, and there are some standard approaches developing. There's people have done things before, go learn from them and copy that. Don't try to invent it all yourself would be my first suggestion. I do think blended finance has a useful aspect, which is that it joins forces. It brings together very unnatural allies, government standing forward to set the right policy environment and rules of the game about land ownership and other things, commercial investors stepping forward to put very thoughtful, every dollar counts kind of thinking into something, and financial intermediaries and people who make deals happen, like Nicolas' shop. So it really does bring people together to think together. I think it's actually a strength of blended finance. Private sector financing, once you figure out a revenue stream, can be more permanent than the kind of grant financing that often is used in solo form in conservation. That's something to think about. But it does take an awful long time to pull these things together. These structures are difficult, and you have obviously different motivations working in the same transaction. So do it only if you think there is a possibility for a meaningful and sustainable and scaled outcome. And not all of this blending will attract totally commercial parties, especially in the tougher conservation areas, like life underwater. What is the SDG 15, I think? Correct me if that's wrong. And so you may very well end up in the province of grant money and impact forward money achieving something, and not in the province of large scale, pension fund investable opportunities. So those are some closing thoughts for you. It's worth doing. It's not worth doing all the time. It has some limitations. It has some amazing upside in terms of collaboration. And it's one tool in many to try to achieve a conservation outcome. So I will stop there. I hope that that's a basket of thoughts for you.
No, thank you so much, Joan. Great parting thoughts. Nicolas, what's your advice as we all leave here this morning?
Okay, it's always the killing questions. I mean, we're very positive that bringing proof of concept is going to open the way to many other solutions for MPAs. We are convinced, very much aware that the situation is critical for many of our marine protected areas and other fishery management tools in the Caribbean. Something has to be done. With government, so working really closely with governments and local partners. We're very glad to showcase that solutions exist in some cases, in some contexts. It's not the only solution, there are other solutions. But I think that brings the attention to government that they have to do something about paper parks. They have to do something about marine conservation, and this will attract also private finance or catalytic funding or development finance. And this is also very important for governments. They have to struggle with public budget. They have to struggle with many priorities. So bringing them a turnkey solution where they can address the commitments of SDG 14 and protecting 30% and overcommitment of natural resources, but without too much burden on the public resources, I think is extremely important for the Caribbean. And it's very important for the Caribbean. and we sure.
Forgive me, I'm just watching the clock. And I know we have, I just want to get a last word in from Angelique and Viviana too. Just so forgive me, I'm sorry, I haven't managed the time well, but Angelique and Viviana, what's your last sort of 10 seconds each, your last piece of advice for our listeners today?
Okay, I'll take it from there. So for the people in the Caribbean, don't forget that available finance does not mean accessible finance. So that's a whole other challenge once that finance becomes available. Let's find ways to institutionalize knowledge sharing. These platforms are great, but how are we best able to continue to connect and learn from each other? And finally, I'd say that we really need to put some focus on this and monitoring the social and environmental impact. Otherwise, if we're just focused on the finance, it's really more business as usual than really transitioning to something different. I'll end it there.
Thank you, Angelique. Viviana.
I'll just join that. And I think for whatever form of capital you're looking, if it's government, private, etc., that monitoring and reporting of what is your MPA doing, what is the impact, what are your social impacts. So start thinking of your MPA as a business, as I already said, and not a business for profit, but a business for impact, and start showing and communicating those impacts and make really sure what are your financing needs. So business planning would also help you access either government funding or types of capital.
Thank you so much, Viviana. And thank you to our incredible panelists, to the Caribbean Biodiversity Fund, to our friends at the St. Lucia Conservation Trust. This has been a fascinating discussion. We need to think about ourselves as social entrepreneurs. We need to think about conservation not as a charity, but as a business with revenue streams built on wide partnership and political will at the highest levels. And we have to think about, and I really agree with Angelique, how do we make sure we take this really interesting deep dive into impact investing and blended finance and really begin to build knowledge around that, so that each of the conservation trust funds and other organizations listening in this morning can really begin to understand what this means for the Caribbean, what it means for their business models, where there is available finance that could become accessible finance. What does all of this mean? And so we're committed, and I'm sure all of our panelists are too, to continue working with you all to make sure we can look and identify where impact investments, where commercial finance, and where blended finance can best work for the Caribbean. Thank you so very, very much, everybody. Thank you for a wonderfully active chat and Q&A session. And please stay tuned for the next really exciting session. Thank you, everybody.
Thank you. Bye-bye.